Something a little different, a little special this time around. We're currently in the midst of the second and third largest bank failures in U.S. history, and to me, there isn't a better time to give this visual audio book for this article that I wrote for a colleague. His newsletter is called Infrared Insights, and this specific article, we're going to talk about the long-term investing opportunities that coincide with the Bitcoin halving cycles. Please remember, crypto is highly volatile. None of this is financial advice. And to always, always, always do your own research. First things first, what is Bitcoin? I'm going to paraphrase this. I'm going to leave this up here as I'm talking. This is a screenshot from the Word document of the article that I sent to him. But what is Bitcoin? Bitcoin is a digital currency, also known as a cryptocurrency, defined in a white paper on October 31st, 2008, and created on January 3rd, 2009, by an unknown individual or group of people using the pseudonym Satoshi Nakamoto. Bitcoin uses what's called blockchain technology. The blockchain technology is a decentralized digital ledger that records transactions across a network of computers. The transactions are recorded in blocks, which are linked together to form a chain, hence the name blockchain. Each block contains a record of multiple transactions, and once a block is added to the chain, its data cannot be altered or deleted. This makes the blockchain highly secure and resistant to tampering. Each block also includes a unique code called a hash, which is generated using complex algorithms and serves as a fingerprint for that block. The blockchain is maintained by a network of computers, also known as nodes, which work together to validate new transactions and add them to the blockchain. This process is called mining, and it is done through a consensus algorithm called proof of work. Miners use powerful computers to solve complex mathematical equations and create new blocks, and in return, they are rewarded with newly minted Bitcoin. Bitcoin uses peer-to-peer technology to operate with no central authority. Managing transactions and issuing money are carried out collectively by the network. Bitcoin is open source, its design is public, nobody owns or controls Bitcoin, and everyone can take part. Transactions are made with no middlemen, aka no banks. Alright, moving on to the halving. The halving is an event that occurs every 210,000 blocks, or roughly every 4 years. The block reward for mining new Bitcoin is cut in half. This is built into the Bitcoin protocol as a mechanism to control the rate at which new Bitcoin are created and introduced into the market. The halving is designed to control the rate of inflation in the Bitcoin economy and to keep the value of the currency stable. By reducing the rate at which new Bitcoin are created, the halving ensures that the total supply of Bitcoin will never exceed 21 million, which is the maximum number of Bitcoin that can ever be created. As the block reward decreases, the mining becomes more difficult and it becomes harder to mine new Bitcoin. When Bitcoin was first created, the block reward was 50 Bitcoin. After the first halving, it dropped to 25 Bitcoin. After the second halving in 2016, it dropped to 12.5 Bitcoin. And after the third halving in May 2020, the block reward is 6.25 Bitcoin, 6.25. The next halving is expected to occur around the end of March 2024. As you see, the price of Bitcoin has historically increased significantly each halving. But now that we have some background knowledge of Bitcoin, let us dive into how you can take advantage of investing in it from a technical analysis perspective using extremely simple methods. The most commonly used fib ratios include the 23.6%, 38.2%, 50%, 61.8%, 78.6%, and 100%. Additionally, some traders use Fibonacci levels derived from the golden ratio, such as 886. In my experience, here is why this level plays a critical step from a Bitcoin investing perspective. Here is a chart covering the price action for Bitcoin of the first halving cycle. Since we are looking at the buying possibilities, unless noted, we are setting our fibs from lows to highs. The best buying opportunities came once we reached that green box in between the 786 and the 886 levels, and you will see how Bitcoin stays tried and true when it comes to these certain Fibonacci levels as of now. Once we break that 786, we are in 886 territory, and without a doubt in my mind is the best time for long-term cold storage buys. Price stayed in this fib zone for a whopping 308 days. That's 308 chances to buy the dip, fatten up those cold storage wallets. You can also see how after the halving, price just skyrockets. In total, with the worst case scenario investment at the start of that 786 level, you would have seen a return of 17,092.46%. Not a bad return for the early bird who got the worm. Here is a chart showing the second halving cycle. We're going to keep applying these. We're going to keep applying the 786 and the 886 level from the previous low to that cycle all-time high. In this chart, you can see the historical viewpoint of Bitcoin halving cycle 2. Same fib, same level, same strategy, and you get the similar results. Once again, Bitcoin gave you a range of 273 days this cycle to load up for the cold storage, long-term investments, the bigger picture. In the second cycle, the returns weren't that large compared to the first cycle, but it still gave you a 7,796% ROI. Last but not least is the data for Bitcoin cycle number 3, which was the most recent bull run that took us to an all-time high of $68,944.62, depending on which chart you're looking at. This run gave us a return of 1,469.34% from the moment the price went into that 786 green box Fibonacci zone shown here. Unlike the previous 2 cycles, we encountered COVID, which was a major global black swan event that gave us another glorious buying opportunity later in the cycle, and that lasted for 7 days. Even if you aren't an active everyday trader, applying these methods and casually looking at a chart will provide you with the success you need in the long run. For example, you could set your Fibonacci tool on the low to the high and set alerts in TradingView at the levels you are interested in buying to save you the worry. After all, me personally, I'm a firm believer in working smarter, not harder. One thing to also take note of is how the returns seem to be shrinking for Bitcoin. The first cycle you were able to rack in that 17,000% from the top of that 786 level to that cycle's all-time high. For the second cycle brought in a 7,796%, and the third cycle 1,469%. And all of those numbers are based in the top of that 786 to 886 range. Another observation I've had over the years is that the buying opportunity window of this method shrinks as the cycle moves on. I'm not saying this is a guarantee for the future, but as far as the cycles have gone on, the window gets smaller and smaller. During the first cycle, we had a window of 308 days to buy the dip at phenomenal pricing. The second cycle, we had 273 days, and the third cycle lasted 140 days with another week during the COVID price drop. You have to take advantage of these opportunities. This reminds me of that infamous saying by Warren Buffett: be fearful when others are greedy, and greedy when others are fearful. So once again, just showing the cycles and how many days it's lasted. The window of opportunity gets smaller and smaller using this method. So great. You think past data is fantastic. Looking back, we can see where the best opportunities took place for each cycle. You may be asking me how one could apply this for this fourth Bitcoin halving at approximately the end of March 2024. In this chart, you can see the overall layout for what will be cycle 4. Fibbing the low to the high, you come up with a sweet spot of $10,786.97 to $17,889.77. Taking one step further and applying high time frame support and resistance, we end up with a zone of 10,859 to 13,734, with the 886 level at 11,214. This is where you get those price predictions of Bitcoin going down 10,000, going down to 10,000, going down to 14,000. The last cycles did not quite hit the 886 on the dot, but these high time frame support zones just line up too well with the 886 and look too good of an opportunity to take advantage of. So it's important to keep these levels in mind. But this is why you have a general zone to deploy funds instead of one set magical number. By looking at previous data, one could argue that once price hits the golden pocket of the fib, it's a great time to start dollar cost averaging. If the prices go up, you have horses in the race. If the prices go back down, you can add more horses. You are applying the best buying opportunities instead of just throwing darts at the board blindfolded. Applying these cycles theories is part of my favorite trading strategy. Plan the trade, trade the plan. Outside of using fibs, another strategy that has historically paid off is the history of the weekly MA200 for Bitcoin. And what's shown here for this chart is cycle 2. Now, a moving average, or an MA, is simply the average closing price of an asset over the last X amount of days, weeks, months, whatever time frame you're looking on. Moving averages vary in their duration depending on the purpose they are used for by traders. MAs can be utilized as trend indicators of price behavior over time. This average is used to study price behavior over the long term. In this case, the last 200 weekly candle closes for Bitcoin. This next chart adds that WMA200 to cycle 3. Look at how the MA lined up perfectly and was a hell of a buy opportunity with confluence using that 786-886 fib method, that fib zone. Historically, looks like a great buy, right? There's only one problem. Currently, we're under it with conviction for the first time in Bitcoin's relatively young price history. And if you see here, this is where we're at now. We are under this weekly 200. Bounce, 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 bounce. Not so much bounce here. Notice how during the COVID drop of 2020, price sold off under the WMA 200, but it did not have a definitive close. Well, this is where we are now. Right here. It's the longest that price action for Bitcoin has been under this WMA 200. At the time of writing the article I did for Infrared Insights, which was January 28th to the 30th, 2023, a lot of people are starting to become euphoric and think the bull party is back on. Macro, I'm one of the biggest Bitcoin bulls walking on the face of this earth, but I don't think we're out of the woods quite yet, and this is why I'm hesitant from a TA perspective. Let's label it me being cautiously optimistic. Now, this also was before these bank failures happened, so this does help the case. Peter Schiff, my favorite Bitcoin bear, stated these bank failures and what the Fed is doing as a light version of a bailout. So, All right, we ate up all the sell-off from the whole FTX debacle, and price has been pumping straight up. The only problem is price has been pumping straight into some hardcore resistance. In order for me to be convinced that the bull market is back, I need price to take out those highs with a strong move on some nice volume. Not only does it need to take out those highs with conviction, there is also other high time frame resistance of the weekly moving average 200. Price also needs to avoid any bearish divergences on RSI and or OBV. These are the highs we need to take out. This is that weekly MA 200, this blue line right here. Just in case if I didn't clarify that or you didn't pick that up from before. All right. So if the bull party is on and $15,476 was this cycle's low, one would love a scenario where we see a strong relief rally turn into a dump of a modest amount, and then the bull parade is on for cycle 4. Instead of setting our fib from low to high for the bull run buy potential zone, we will flip our fibs for the sell, which turns in from high to low. This could create a nice sell zone at monthly resistance and the golden pocket in the red zone on the chart, which is 45,500 to 50,000. Highlighted is a green price line or aqua price line showing an example of how price could play out in a scenario like this. After the 2017 bull run to 20,000, we saw a relief rally that played out in the same way. So this is setting your fib from high to low for the sell using high time frame support and resistance for that sell to the fib. In this chart, you can see the fib set from high to low for a high time frame sell scenario with that monthly resistance confluence at the fib golden pocket. It's a very similar situation as to what could be on the horizon for this current halving cycle. So we had the high to low, hit this high time frame resistance fib level and sold off to that weekly MA 200. I hope you enjoyed my perspective on the best long-term investment opportunities for Bitcoin using technical analysis. If someone gives another point of view, I'm not saying they're wrong, I'm just giving my 2 cents. Remember, nobody knows for sure where markets are going, and if you hear crazy price predictions about an asset, it's probably a bunch of nonsense for likes and follows. All the attention. For some reason, the bull narrative is what grabs the attention. This is why I used information from past cycles to show what possibilities could be on the horizon for this current halving cycle and future cycles. This is important. Study this. All of this will be applicable to future cycles. If you're a beginner in this crypto space, my book, A Beginner's Guide to the World of Cryptocurrency, written by myself and my business partner Taariq Paul, is a great starting point to get informed on the basics and develop an idea of where you may want to take a deeper dive within this space. The book is available at honorableassets.com or on Amazon in paperback, Kindle, and audiobook formats. Honorable Assets is my investing and technical analysis education company. We offer a tiered mentorship program where you have access to market updates for Forex, traditional markets, and crypto. We have pre-recorded classes and multiple weekly Zooms covering technical analysis and our exclusive trading strategies. It's also a great place to be around like-minded individuals. Feel free to join our free Telegram group. I'll post that in the link below, t.me/honorableassetsfree, all one word. And we will cover Bitcoin on a macro level and some other crypto projects to look for the best potential investment opportunities. In this article that I wrote for Infrared Insights, I attach images showing high time frame price channels and potential high time frame deviations. I also cover a fib extension theory of the previous 3 cycles, and it may map out some potentials as to where cycle 4 is headed. I also give additional overviews of each cycle and how it played out, and give reference to ROI from the halving on up for each cycle. Happy trading, and by the time the next cycle hits, may your cold storage bags be plenty and ready for liftoff.